It is the big story today. Gold futures climbed as high as $1,045 an ounce in New York trading. Can it sustain this advance? Frank McGhee, he's a head precious metals dealer at Integrated Brokerage Services in Chicago, says yes. And not only did Frank anticipate this latest move, he called it, and he says he sees gold climbing even higher by year end. Our market reporter Michael Whitney also joins us today. Frank, welcome. Michael, thanks for sticking around. So you made this call. You called just a couple of weeks ago on this very program, Frank, that gold would hit this level. So where does it go from here, and what's going to drive it there?
Well, the biggest aspect now is that we're in uncharted territory. All of the technicians will try and pick the numbers. You'll see people looking between $1,200 and $1,400. The real component here is that you're going to see a monetization of the debt, and that will continue to weaken the dollar. This is predominantly a dollar story at this level. I could see easily $1,190 to $1,200 by the end of the year.
Are investors simply protecting themselves against weakness in dollar-denominated assets in the wake of Australia's surprise rate increase? You did, call this price lever for gold, but did you know that Australia would really surprise a lot of people and come out and be the first central bank to hike rates since the crisis?
Interest rate differentials, and as you see Europe and the other aspects, areas of the world economy come out of recession earlier than the United States, the expectation will be that you will get a decline in the dollar and an increase in those economies and those interest rates first. That will hurt the dollar. That'll help gold. The other component is you still have a lot of fear. There are a lot of people still looking at the potential for a double dip. I'm among them. If you do get a double dip in another round of write-downs, that they're still sitting out there, and there is becoming another potential for an additional stimulus, you then have a tremendous amount of liquidity that's sloshing around. How is that liquidity going to come out of the system? That's the real key to this story.
Now, Frank, speaking about fear, I remember last year how gold was trading after the collapse of Lehman. It spiked initially, but then it just cratered with all the equity values. And gold, what we've been seeing is that it's been acting more like a risk asset, not a safety play. What would happen if, say, the S&P cratered, 8,800, something like that? Would you think you'd see a sharp pullback in gold as well?
Well, I would think you would see an initial knee-jerk pullback as people are looking to raise dollars. As soon as that initial wave of liquidation of assets and dollar raising ended, you would see gold resume its upward move. There is also the other aspect. At these levels, if you were to have a significant sell-off in the equities, you've got just as much of a likelihood that gold would continue its advance. There are a lot of people that miss this move, and there are a lot of naysayers out there that are having to explain why they're not long gold.
So, Frank, is the physical market relevant at all? Are we looking at jewelry demand in wedding season in India? Is that relevant anymore? Is it just a pure inflation play and a safety play?
It's predominantly a currency play. The jewelry market in India, the Indians will tend to not be a buyer on rallies, but to be a buyer on breaks. They look to buy the value. And in this element, your inflows into the ETFs, the overall amount of just asset diversification, where gold is the original currency and it has regained its leadership role in terms of a balanced portfolio.
What is the impact of the spike in gold having on silver prices?
Well, silver is always a two-hatted instrument. Half the time it's industrial, half the time it's precious. We certainly have seen silver coming back significantly with its precious hat on. The interesting aspect in the silver market is that it's sold off so much more than gold in the break that it actually has room for greater upside appreciation over the next 6 months or so than gold does.
Frank, I keep hearing about a lot of traders talking about how bullish they are on platinum. A lot of that has to do with how difficult it is to get platinum out of the ground, and a lot of power issues in South Africa, the world's largest producer of platinum. Do you like platinum as much as you like gold and, say, silver?
The infrastructure issue has always been a problem with the platinum market. About 6 to 8 months ago, when platinum got equal or even money to gold, it was one of probably the best buys that you'll see for the next 10 years. At any point in time that you have significant weakness in platinum relative to gold, I see it to be a good buy. But platinum is more of an industrial than it is a precious.
All right, our thanks to Frank McGhee of Integrated Brokerage Services and my colleague Michael Whitney talking about gold prices today.